Welcome, welcome, welcome. It's episode 2 of the Bull Movement. I'm super excited, Christian. We just dove in. You guys are going to love this podcast. You know, we talked about Tesla's battery day. We talked about the crazy Nikola saga. We dove into, compound interest and personal finance and just the importance of being in the market, being in it for the long term, and how stocks are only going up if you do it the right way. So we went wild on here. I hope you guys have some value. Like always, tweet us at The Bull Movement. Find us on Instagram at The Bull Movement. And then we're going to be bringing out The Bull Movement Twitch. So always interact there. We answer your questions live on Twitch. But other than that, guys, we'll see ya. I mean, it's Wednesday, right? So
Wednesday hump day.
markets are closed, right? So the markets are closed.
Market's
And
closed.
talk about a bloodbath. I mean, a bloodbath in the markets today.
Do the markets even know what they're doing now? Like, do they?
No, they don't. I would say they don't. Like, because first of all, before we dive into it, I mean, what's been going on with Nikola, man?
Brandon, I think only he can answer that, and I think that the investors already know. That's probably where I'd go with my money.
Dude,
There's a reason it's down
$21.
20. What's it down? Isn't it down 25%?
Yeah, today.
Oof.
It was down like 25% yesterday too.
And
It was at
yeah,
$52 on September 8th.
I'd say that's not good.
6 month. $79 in June. God. Oh. Yeah, for those that don't know what's going on with Nikola, the Hindenburg research came out with a report, and they basically pointed out it wasn't just one thing or two things or maybe three things or four things that Nikola did wrong.
It was 75 pages worth?
Yes, it was.
75 pages. Yeah, let's see. So Hindenburg research. Let's pull up the article. If I can find it. I think this is it right here. All right, yeah. I think it's 75 pages worth of what the company is clearly doing wrong. Wow.
And this was literally days after, I think maybe 1 or 2 days after GM came in with a $2 billion stake into Nikola. Right?
I mean, yeah, I think it just shows how like we were talking about earlier, how much these companies want to try to compete with Tesla. You know, you have the stuff going on, like what California just posted. What did they say? By 2030, by 2035. I don't know the exact date, but by 2035, they want to say that no cars in California, that cars sold in California in 2035 have to be zero emission cars.
Yeah, 2035. So, I mean, that does that not solidify Tesla's dominance? I mean, if you see, okay, this was the public company that was coming up against Tesla, GM's getting into Nikola, and all of a sudden the truck that they have a commercial pushing down that's rolling down a hill. They didn't have an engine, like it wasn't working. That's the competition. So it's been interesting to see you would think, personally, I thought I would have seen a bigger jump with Tesla, but I mean, I don't know.
Yeah, I think earlier, I don't know if it was earlier in the month, when Nikola was popping off, that Tesla wasn't, it was staying pretty stagnant after a couple really positive days where people were like, wow, people are really bullish on Tesla right now. The call options are coming in, you know, not a lot of puts. It's just like, people were seeing, oh wow, Tesla's really doing it, and then Nikola comes in, right? And then people are, oh wow, this could be a really big competitor, and then Tesla started to slow down a little bit.
Yeah,
So
because
the
money was just
really,
it was just another vehicle, like it was just another EV, electric vehicle company, to just go in, put money into. As you've seen, this is what Tesla did. Look at their stock. Like, let me
yeah,
throw money into Nikola
yeah.
because they've got hype
I
too. They're
think,
coming up.
and obviously, I'm sure some of our listeners definitely know about Robinhood and
Yep.
the risky games that a lot of people on Robinhood do play. And I'm pretty sure that there was a significant amount of people who were, extremely bullish on Nikola. And then, come to find out, here's how they're playing games, right?
Yeah, now he's. I remember the day it came out, the report came out. Um, the CEO, he comes out and is like, "This is just a bunch of BS. Like, I'm not backing down, whatever." And now this headline here, he's deleted his
He
Twitter
steps down.
account. So he stepped down from the company, deleted the Twitter account. He's about to get investigated like crazy. So I'm guessing this is just, him trying to distance himself from the company trying to protect him as much as they possibly can.
He's stepping down, but as you see with these white collar crimes, we know how it's gonna end. Just gonna with the slap on the wrist, you know.
I mean, that's all it
It's,
is.
it's gonna end with a couple months in jail, a hefty fine of $1.5 million, which is probably paper to this guy. It's chump change, and a slap on the wrist. Misleading. I mean, exactly what happened in 2008. It's probably what continues to happen today.
Yeah.
I think that's just where we're at the moment.
Yeah, it'll be interesting to see where we go with how Nikola the saga plays out. But I mean, as far as Tesla came off yesterday, the battery day, and the investors they weren't pleased.
They weren't, and I think a small part of that, I haven't done too much research on it, but I think a small part of that was due to, I think they were saying that the price changes in their batteries wouldn't happen for a couple of years. And I
Yeah,
think that's what people are a little concerned about, is that it wasn't an immediate change.
yeah, and I think that's just it's going to be a huge change. Like it's going to be revolutionary for the battery industry as a whole. But that's just the way these short term traders are. It's going to be this is a 3 year timeline, right? So, well, we might as well move the stock a little bit. You know?
Yeah. But what I don't really understand, right, is that, we're obviously, where most people are long-term investors, right? So most people are long-term investors. Is that the way that the market's moving, right? We expect it to move upwards, obviously, right? But at the same time, I feel like, sorry, I'm completely losing my train of thought. Sorry, that's where my point was going. Is that the markets are an indication of the future, not an indication of the present, right?
Hmm.
Like we're not investing into a company thinking, oh wow, this company is really profitable right now. Let's put a whole bunch of money into it. It's not what we're doing at all. If you look at Uber, Amazon, um, Grubhub, all those kind of application companies, they were all had negative profits for a very long time.
Hmm.
This wasn't just one one profitable year here, a down year here. They were negative for a long time, but the reason that they still kept getting investors is because of the future, what they expected to make eventually.
Hmm.
I think with Tesla, I mean, in 3 years, like that's essentially short. I mean, that's medium term, but it's not long term by any means. 3 years is right down the road.
Yeah, yeah. I mean, 3 years is quick, and I think it just comes back to the stock. And this is just for everybody's. Yes, we're looking at a 3% drop on the Nasdaq, 2% on the Dow, 2.5% on the S&P. So yes, the market got ripped today, but Tesla was moving already like this um, during the trading day yesterday when they were coming up to the battery day announcement and then also after hours. So this isn't just the market playing with this. So I think, like you said, the majority of people are long term traders, but the majority of volatility is short term traders. And so
That's a very good point.
that's what you just have to keep in mind. And I don't know about you, but Tesla, if we back it out, yes, ginormous run up, right? Like a lot of other big tech names. Yes, this came right after they announced a split. Went up to this is post split levels, $500 a share on August 31st, the day before the split, and then it fell back and then sold off after the split to 330. Then hung around 370s, ran up pre battery day 440, 450, 450 again, tested that resistance, and now coming back down, sitting at after hours now 372. This is, yeah, it looks like it's harsh, 500 to 370. I think this is a really good consolidation area, and like you said earlier, Christian, when we were talking off off camera, earnings day. Keep in mind it's October 21st. It's just a month away, so that's gonna be really interesting. Like, okay, yeah, we just did battery day, but now we've got less than a month of probably about a week, 2 weeks in front of it. There's going to be hype building the stock back up. I see this as long as there's not a bigger move in the market, which I think today's sell-off, we can talk about that in a second. I really think that Tesla is sitting in a pretty good position long term.
Yeah, I would definitely agree with you. I am, I think we think the same way in regards to that. Is that long term, unless you have a company like Nikola,
Mm-hmm.
long term, your company, you're investing should always be sitting in a good position. You should always have that confidence that it's sitting in a good position, right?
Mm-hmm.
But I I think that with the previous earnings report that Tesla posted, and how much the stock shot up, literally a month, after all this, COVID from March, how much it shot up. I don't see any reason as to why it won't get back, especially short term, get back to where it was. And I think that, people are just selling on the news, and then they're going to buy on the news, once the earnings comes out.
Yeah. I mean, I just see this company making $60 billion market cap swings every couple days. And I mean, this has been the story of Tesla from the start. Like, this is just a stock that has extreme volatility.
Elon Musk with, people, with small term investors buying in, big, big money moving in.
Mm-hmm.
I think that's just, what causes, all that volatility is just the fact that there's so many small fish in there, and there's so many, big fish, that are just trying to, buy in, buy it up, buy it up, buy it up, sell out quick,
Yeah, I mean, the battery day was an event. Elon tweeted Monday night, so battery day was on Tuesday after market close, and Elon tweeted after market close on Monday that the battery day event, it's going to be, he downplayed it a little bit. This is going to be some exciting changes, but this isn't going to go into effect for a couple years. And so that kind of like made some people shudder a little bit.
I think that is exactly what, people are worried about.
Mm-hmm.
Which, like we were saying earlier, is, not necessarily a weird thing, but it, like all these companies, they're posting, negative profits, and here Tesla is making, extreme, really good profits in their company.
Yeah, 4 quarters of straight profitability.
While also trying to reduce costs.
Yeah.
So it's not like they have to reduce costs by any means, right? I mean, obviously should be the goal of a company, but they're still making those strides. They're still making great strides, within their lithium battery industry.
Yeah, and I mean they're got a plant coming up. They're looking to build one in Germany. They've got the one in China, right? They're building one in Austin, Texas.
I remember I knew about the one in Austin, Texas, and I think that Tesla was the number one selling car in Japan as well.
I think it was China.
In China?
Yeah, with like when they opened up the Gigafactory. And the interesting thing about that is Tesla actually owns 100% of that. And so that's a little bit different. A lot of the US companies going into put a plant in China, there's a percentage that China owns. And so it's actually a pretty interesting thing that they were able to get 100% ownership in China, and now they're the number one vehicle selling right now.
That is interesting. I mean, obviously, we're seeing, the wraths of that with, with the TikTok, TikTok at the moment. So,
and the amount of leverage, the amount of just first mover market share that Tesla has grown on, and now seeing that the EV market is just getting started. I mean, this is just a super positive outlook. I see, and then seeing battery day, the really improved enhancements of lowering cost, and then also looking to be almost fully 100% vertically integrated in their own company. I mean, that's just going to dominate. It's just going to dominate. And you know, next 10 years, I could see Tesla being, and yeah, I know this is crazy, sounds crazy. I could see Tesla being valued higher than Apple next 10 years. So just we'll hold me to it, and we'll see later. We'll look back on it.
I think it's also interesting to think about is just the fact. So, with Apple, when Apple was rising, right, you had BlackBerry, you had these different competitors, right, but you also didn't have as much as a news network as we do now, right. So, I'm sure the stock, was wavering. I mean, obviously we were extremely young, when Apple was first joining the game, and how the stock movement of Apple was doing then. But like I said, you had, Android, you had BlackBerry, you had different, different people in the game, right? And I kind of am wondering, right? So like, obviously we saw with Nikola that, the price of Tesla kind of, settled off, and it was almost like, wow, there's another big player in the game, right? And it's just like, that's going to happen again. There's going
Hmm.
to be another company that's going to come in, and people are going to be like, wow, this could really take over Tesla, right? But it's just like, in my opinion, I feel like Tesla, like you said, being the first player, especially having Elon Musk at the helm,
That's
and
the
just
biggest game changer.
the amount of, kind of relatability that he has to people, I feel like that's kind of what's going to, separate the company apart, from its competitors.
Yeah.
If and when they come. I mean, not if they come, but when they come.
I mean, yeah, there's plenty of other, you know, EV companies out there that are trying to get started, but it's going to be an uphill battle. I mean, you see the desperation of GM. You see the desperation of these traditional you know, gas-powered automobile companies over here doing $2 billion stakes with Nikola, right? I mean, that's just desperate. That's desperation mode. They see
Yeah.
the threat.
With that company, right? And then, look what happened. Look what just happened. You know. I mean, I'm sure that's not a coincidence by any means that they put that much money at stake, into the company, and then boom, all of a sudden, they take a deeper look, and oh wow, there's some shady stuff going on.
Oh wow, we didn't do our due diligence. Wow.
Exactly.
Yeah. I mean, Nikola's still at $8 billion market cap, and I want to say they were about
I think they were 30.
yeah, it's about 30 to 40 billion market
Yeah.
cap. Um, and they had never even sold a car, and they didn't really even have a working vehicle, and that was supposed to be the closest competitor to Tesla.
That's pretty wild.
And Tesla's got, I think Elon said something, upwards of 600,000 reservations for Cybertruck coming out next year. Right? I mean, come on. Come on. I don't want to hear any more of this shorting Tesla. I mean, come on. You can't, you just, if that's your thought process, just don't do it, because that's going to be bad news. But what are you thinking, Chris, about this? I mean, this massive sell off today. I mean, we're in the red.
Most definitely in the red. As you can see. Yeah, I think that it definitely has some part to do with the recent coronavirus spike in Europe, and I think it has to do with the fact that a stimulus bill, there's doubts on the stimulus bill that's supposed to be passing right now. And it's interesting to look at. So like I think the Fed came out last week saying they want to keep their target of 2%, average inflation rate. And I think the Powell, he wants to, he thinks that even with the stimulus bill, that will be well within those constraints of having on average 2% over the next couple of years. Because I think right now I don't even think inflation is that high, just due to the fact that people are saving a lot. There's a lot of unemployment. So it all kind of balances out, right?
Mm-hmm.
And I think that that sell off just comes from the fact that people, yeah, people were just expecting the stimulus bill, and people are expecting the coronavirus, to slow down a little bit. And now that there's a new spike in Europe, and that's kind of just how, and really all it is that's how the news is going. You know what I'm saying?
Mm-hmm.
Is that even though it may be obviously there is a spike going on over there, but like how much of a factor will it play? And I think that's just what they're speculating on, and that's why, the sell off is kind of happening.
Yeah. I know we kind of talked about it in the last podcast. It was, we saw a huge overextension with the multiples and tech stocks and just that stay-at-home play, and now seeing, like you said, these cases spiking up. Yeah, I mean, it's pretty interesting. Like, when's the last time we had an election year in the middle of a pandemic?
I forgot about that. I forgot about the election. Never. I mean, never. I mean, I don't even.
It's probably
not in my
never
lifetime,
like.
that's for sure.
Wait,
That's
what
probably
was
never
the
gonna
Spanish
happen
flu?
again.
Was it 1916 or something? Maybe,
even
I don't know. But yeah, so there's just so many factors going on. Now to see these movements, I mean, I don't know. The last couple of weeks have just been choppy. Once we got just getting into September's just been choppy.
I think it's been negative for 3 of the 4 weeks at least. I think it's been. I mean, the market will probably end, if I had to guess, negative this week, and it's gonna be. I think that's gonna be 4 straight weeks of ending in the red. Weekly.
Yeah. So now with this, right, with the way the markets are going right now, what's your play, right? At what level are we trying to jump? At what level are these, stocks, these tech stocks, these big names, or maybe more value plays? Like what are we trying to reposition in? Like what levels are we looking at here? Like how far does Apple need to go, for example, to get into it?
So I think that's a really interesting question, right? So if you look, so on the Wall Street Journal, right? So this is the news source that I typically use, right? So you look at Apple stock, right? And you look at what's going on. So let me pull it up. Let me pull it up real quick, right? So you pull up, Apple stock, you see what's going on, right? It reaches a high of a 111, a high of 112, and now it's sitting around 107, right? This is just for the past 5 days.
Yeah.
But what's interesting, right, is that I probably wouldn't venture to say that I'm smarter than, the people who are grading the stocks at the moment, right? Hopefully I can get to a point where that's happening, right? But you just look at the news, 2 hours ago, right? Apple stock can't go much higher. Buy these tech stocks instead, right? Apple stock underperforms Wednesday when compared to competitors, right? So you're seeing a lot of negative news, and that's what investors are selling off of, right? Everybody has the same level of news, generally, right?
Generally,
obviously
yeah.
There's insider trading, this, that, the other thing, but generally everybody has the same level of news, and I feel like that's kind of what's moving it now. To figure out when it's going to stop, like when the bleeding is going to stop, I think it's really hard to do. I think that's obviously something that we need to, keep learning, to keep, realizing. But, I think that Barron's just, downgraded Apple to, hold, no longer a buy. But it was a buy when it was at 112, right? Which, it's kind of like, how does that make any sense? You had to buy it because now the price target, I think, Barron said was 115. So how is it a buy at 112? But now it's a hold at 107.
Yeah.
You know what I'm saying? So it's like, it's just such a quick change, and it's like, what really changed? Other than the markets moving, and that was it.
Yeah, I mean, this is something that we've been seeing, right? Is you see this in this tech run up, right? Like we saw over the summer, and up, 600%. Stocks up 100%, 120%, 200, 400%, right? And all we're seeing is these analysts come in here and just adjust their price target, increase price target, increase the price target, buy, increase price target, go from 300 to 400 to 500, and basically just chasing the stock up for no other reason. Yes.
That's exactly what they did with Tesla. They jumped the price target from 300, or I think they jumped it from 300 to 400 while the stock was at 440, 450. And it's like, what kind of, I mean, it's understandable. Obviously you think it's overvalued, right? But the investors don't believe you.
And
you know what I'm saying?
And this goes back to where you say everyone's got the same type of news. Generally everyone has the same type of news, right? And so when you have these analysts basically just going crazy with price targets, Like, at what point does this like become a thing where it's like, okay, maybe this isn't credible. Like maybe this isn't what, because it used to be they people would put a price target in, and it'd be like that for a while, and now they're just
Yeah.
chasing everything, chasing it down, chasing it up, and adjusting it, and it's just like, oh, now I'm just correcting myself. So I don't know.
But
It's like it's in that that's people making short term moves off of crazy price targets. Like when any bank downgrades something, you'll see a sell off, like just because that bank does it.
yeah,
When
if
anytime
you just
someone adjusts a price target goes up, they issue a buy on a stock. Oh, it's gonna jump, and so I don't know. I don't really like.
do you
You
think it's
can't really
because there's so
trust them.
much volatility? With the just the amount of volatility that's going on that but even with that amount of volatility, like if you're really evaluating the stock and trying to see what goes on behind it, it shouldn't be they shouldn't oh people are really buying Apple today. Oh, the financials don't really make sense as to why it's such a high price right now. But the investors are saying that it's at 130.
Hmm.
Oh, let's raise the price target to 115, or
Yeah,
raise the price target to 145. And I feel like just as soon as someone sees that, they're like, oh my goodness, Apple's going to get to 145. Let me buy in right now at 130.
yeah. That's the thing. That's one of these things on Yahoo Finance, right? Literally, I'll scroll down here on the right. It'll basically compile all of the analysts, different upgrades, downgrades, their price targets. And so, for example, Apple, right? Everyone's price targets, all these 37 different analysts, average out at $119 is their price target for Apple. And so right now you see, oh, the current's 107. But then you go and look at these dates, and it's like on September 23rd, maintains to buy. Then someone else downgrades. Then someone else goes from buy to buy or whatever, and then to outperform. And so, I, what's going on? You know?
Yeah. I mean, no, I mean, you're asking the right questions, right? You know, I mean, it's going to be a long road to figure out, how we go about investing and, the type of investments that we want to do, short term, long term, whichever financial markets that we want to get into. But I mean, man, I mean, it's kind of wild to see, the amount of changes that, just like that. Like what changed? You know what I'm saying?
Mm-hmm.
Like what changed other than the mere fact of the stock price, right? So like, did they post bad earnings? Did the event go wrong? Was there a scandal that came out? Was there bad news, good news?
Yeah.
So like what changes to make, because I feel like with Apple in particular, right? Nothing changed other than the market itself.
And that's
You know
and
what I'm
that's the
saying?
thing. Like, okay, if the market movement, like we said a little bit earlier, a lot of the volatility is based off of short-term movements, right? Short-term trades that are short-term traders, right? Day traders, that's the volatility, right? The long-term traders don't move the market as much because yeah, they're long-term. It's not like they're making moves every single day. And so if the fundamentals have stayed the same and you are a long-term investor, when it goes down and the fundamentals are the same, it goes down on an event, it goes down on a headline, whatever. Maybe that's your buy. Maybe those are your buys. As if it's at your levels that you like, then it's
Yeah.
your buy. That's when you
Yeah.
scoop up shares. So I don't know. We're gonna see Apple. We'll see. I mean, they're good. It's September 23rd, right? We haven't seen the iPhone 12 yet. Who knows? You could see a pop with the iPhone 12. You could see more of a decline. Who knows? We're gonna find out though. Another thing I wanted to cover.
Wait, real quick, BJ.
Yeah.
What's really interesting too, right? And I think it's so funny, right? So it says Apple stock can't go much higher. Buy these tech stocks instead, right?
Mm-hmm.
So you just read that headline, right? Really, it can't go much higher. You know what I'm saying? Okay, so it's 3 year, right? Apple is at $40 in 2017, right? Stock split happens, and now it's at 125 a share, or gets to 125 a share. So what do you mean it can't go much higher? You know what I'm saying? Like, what are you gonna say that about the S&P? You know, because if you're saying Apple can't go much higher, then you're essentially saying that about the S&P, right?
Yeah.
Like what kind of sense does that make? You know, like oh, Amazon can't go much higher. Yeah, it can, and it will. You know, I guarantee. Like, what do you mean Apple can't go much higher? I guarantee you, you know, in 5 years, Apple, as long as it stays on its course, which I'm sure it will, because there's so many, you know, millions and billions of people at this point who use Apple products. They're gonna keep using them.
Yep.
So I'm sure, you know, in another 4 or 5 years, Apple's definitely gonna be 150, 160.
Oh yeah,
You know what I'm saying?
100%.
So it's like Apple stock can't go much higher. Buy these tech stock instead. Really, it really can't go much higher. I disagree. You know what I'm saying?
Yeah, it's just, I mean, that's just short. It's just news catering to short term. You know, I mean, that's think about it.
It is. That is.
All of these headlines, like all the movements, short term movements, are based off the headlines. All the headlines are new because it's short term news. So all these fluctuations, when you start looking at, okay, movement up, movement down. If you start backing it out, back it out, back it out. Yeah, lots of dips, lots of ups, lots of downs. But now you start backing it out. I mean, I'm looking at Oracle's chart, for example, and yeah, plenty of ups and downs, but it continues to go higher. It's a solid company, you know? So that's where it just comes down to like you have to just be confident in your picks, like confident in
Exactly.
your own basis, because you're gonna get hit with different news headlines every single day, good, bad, ugly, whatever it is, and you just have to fall back on your own, own rules, your own, program that you basically sit with, that you're gonna make these investment decisions off of, right?
Yeah. If you bought Apple, you know, because personally I bought Apple at 113, right? You know, I sold out of a couple oil stocks that I wasn't, you know, very confident in, right? And this is all me learning, right? Like I could have stayed in oil, could have taken it out, but I invested in oil, bought in at I think 113, 112 was my, you know, what my buy-in point. Like, why would I sell? You know, like why would I? You know, Apple stock can't go much higher. You know, I feel like someone who looks at that who just bought into Apple, you know, at 113 at higher, you know, probably like 5, 6% higher than what it is right now. Oh no. Oh, Apple can't go higher. I'm screwed. Like, no, you're not. You know,
Yeah.
where you're a long-term investor first, right? You can get into the short-term game, but you're a long-term investor first. If you want to get into a short-term game and that's something that you want to learn and try power to you, right? I think that's
Mm,
something that we're trying to do right now.
yeah.
But you know, we're a long-term investor first, and I think that's something that a lot of people need to keep in mind, especially at our age.
Yeah, the time. So if you're listening to this and you're not long term, like if you're younger, and really younger, I mean, really, it's just if you're anyone and it's not long term, you're trying to get in stocks for like the gains, and you're like basically constantly watching and like getting in and out of positions. The time that you get out of a position and the market goes up, it's going to be hard to get in the position if you're not, like, if you're just solely focused on profits here and there. And all the time that you're spending on that, you're losing the long term advantage of what makes the people at the top so rich. Like, take
Exactly.
Warren Buffett, for example. Like, all of his trades, they're long term investments. You don't see, like, when Buffett was younger, it's not like he was over here dealing in options and day trading and all this stuff. It was him spending the time that he would spend watching technical indicators, trying to find an entry and then get out. He was spending it reading about the company, going into his financial statements, the cash flows, and understanding that this business and the market that it's in is going to be appreciate. It's going to appreciate, and it's going to be a good investment. Once he figures that out, he moves in on it and he's confident. And then he lets the market play out. And I mean, Buffett's got billions of dollars.
I,
So
th- I
that's the game. You have to be long term, and we talk about stocks only go up, right? And that's because good companies,
I mean
their
the bull
stocks are
movement,
only
Brandon.
going up in the
It's
long term.
it's called the bull movement for a reason.
Yeah, that's it. The bull movement, stocks are only going up. But if you're a short term trader, and you get smacked in the teeth with -3% today, and you're over here like freaking out, taking losses and like getting in and out of positions. Don't expect stocks to always go up if that's your mindset. You got to be long term.
No doubt. And I think it's interesting. So, obviously, we look at our portfolio, no matter, and let's just get this straight. No matter how big or small your portfolio is, it doesn't matter. You know what I'm saying? You just need to have one. You just need to look into it, right? But, if we're just looking at, how our portfolio was moving during the coronavirus specifically, right? I probably have been investing for, maybe 2, 3 years total now, right? And, just from, my year's investment, right? I lost all the gains just from 1 year, at the worst of the coronavirus in March, right? And you look at that and you're like, oh, no, I need to get out. But why? Why get out? Had I gotten out, I would have, lost out on all the gains that I've, have right now,
Mm-hmm.
which have been recouped since the end of March. I've recouped all gains from, a year ago now. And I feel like that's just the mindset of a long-term trader. And that's kind of like what you have to have if you, want to be successful, with your portfolio.
Yeah, I mean, you only lose when you sell. You know, like when you
Yeah.
actually solidify that you no longer have that position. That's
It's,
when you
it,
lose.
it's called unrealized for a reason,
And
you
that's
know?
another thing. Like, don't invest in the stock market if you aren't able to make your bills that you got to pay. Like, make every month, right? Like, be able to live your life. Because if you're doing that, when the stock does go down, when the market does crash, and you don't have money, or all of a sudden you don't have, you lose some paychecks, you lose your job, you get furloughed, whatever it is. If that happens, and you have no other option, you have no reserves, then you do have to go sell your stock at a loss, potentially 50, 60, 70% down, 40%
Like
down,
for
whatever it
for
is,
survival,
for survival. So if you don't have survival reserves, then you should get those first and then long term invest and build on both at the same time so you can be solid all around. And I mean, that's just basics of personal
like
finance,
exactly. And I
you know?
think Dave Ramsey. I think he's obviously a really big player into that really safe game, right? And obviously, I think we both have the utmost respect. I love watching his YouTube videos. I think he's great. But then there's obviously some parts where I feel like we do disagree as to the amount of risk that I'm willing to take, right?
Mm-hmm.
Obviously I don't want to leverage credit or anything. I don't want to have 15, 16% interest on what I'm investing in, right? I wouldn't want to do that. But if I want to go ahead and take some risk, if instead of saving this amount of money just in cash, right, which I could do, I could throw it into the stock market. I could throw it into you know call options. If that's something that I want to do, I feel like with the amount of risk that I'm willing to take on right now for the payoff later,
Mm-hmm.
I'm not afraid to do that. Just because now, especially in my 20s, I can take a lot of risks. Because I have a security blanket essentially that I'm so young. I'll figure it out, right? I don't have too many bills. I don't have kids that I have to worry about. I don't have the wife that I have to take care of at the moment. So I feel like if you can just take those kind of risks now and learn from them rather than taking them later, you know, I feel like that's kind of the mindset that I'm in, at
Yeah, I
least.
mean, the thing that really changed the game and my mindset, um, when I first got into investing was just taking a look at the compound interest calculator and realizing that you tell me that I put $300 in an index fund over 30 years. Every single month, I put $300 in an index fund, and which just tracks the market over 30 years. I may have, I don't know what the number is, $1 million, over $1 million in my account. Okay, sign me up, right? And so just seeing that, but then it's like, okay, Now you have to do it today, this month. It's hard. It's hard to say I'm gonna sacrifice this $300, and then I'm gonna sacrifice basically $3,600 a year, and it's just human nature to be short term, like
Yeah.
looking at that. But I think that's what changed the game for me when I realized, look, anybody can be rich, like anybody can. You just have to be disciplined with that, and that's kind of what changed the game for me. Just taking a look, and I encourage you, if you haven't taken a look at a compound interest calculator, the market as a whole, on average goes up. The last 100 years, it went up like 10% on average. Now take some taxes away, use maybe 7.5% if you want to be conservative on what your account's going to look like, and do a annualized return of 7.5%, and see what you need to put in every single month to achieve whatever your goal is, however much money you want to have by whatever age. And yes, obviously not going to be a guarantee that that's what happens. It just goes off of history. But yeah, go see that. I encourage you, like, check that out and see, how much of a difference it can make when your contribution is, $100,000 and you've got $1 million in the bank. That's compound interest. And that's just the broadest term of index fund, right? Or you can go in here, learn even more about it, and invest in companies that may be bringing you 15, 20, 25% annualized return. Okay? You build your own portfolio and you've got it that way. But if you're just someone that's like, look, I just want to keep it simple. I don't really like it, but I just I understand compound interest. I need to get in the market. Go check out the compound interest and just put some money in an index fund every month. You're not gonna be disappointed if you can be disciplined with it.
It's almost a no lose game. It's a win. It's a win. You're gonna win in the long run. You're gonna win. And like you said, if you're not interested in this kind of stuff, that's perfectly fine. There's you don't have to be interested in everything that you see, right? But as long as you understand that it's something that you should do and almost something that you have to do, you'll be all right.
Yeah, I think one of the things that it can be intimidating seeing all these 4-letter tickers, 3-letter tickers, all this stuff, right? Start out by putting some money in an index fund, and then what's your favorite thing? What's the thing that you spend the most time on? Maybe it's your iPhone. Maybe it's maybe you play PlayStation all the time, right? And you like Sony, right? Who's the company that owns the thing that you like? Who's the company that you really like? See if they're a public company. If they are, and you understand their business, maybe you look at their, start looking at their financial statements, do your own little look into it. But if you just like that company and you believe in it, maybe you put a little bit of money in that, right?
You almost don't even need to, because the things that you like, right, are most likely things that your friends also like, right?
Mm-hmm.
So like you said with the Sony, right, you have a PS4, right? Millions of other people have a PS4. Your friends have a PS4. You're playing PS4 with them, every night. Go ahead and invest in Sony. You know, you look at AMD, right, with gaming computers, right? I get an AMD. AMD looks like it's crushing Intel right now. I got an AMD for that reason because it's a cheaper price point. Go ahead and invest in AMD. I mean,
Yeah.
it really is that simple.
Yeah.
There's a
I
reason
mean,
these stocks are doing so well.
but that's basically that's the meat of it. That's the basics of. And I know we were talking to one of our buddies, right? And there's people that I know as well that's like sitting on 15K, 25K, just sitting on it. Like, I've gotten them to move their money to a higher yield checking account, interest wise, and they were like, "Wow, I'm getting $15 a month. I'm getting $20 a month in interest, right?"
And people probably think, oh wow, that's so small, right? But is it really that small when you compare it, to the amount of inflation? I mean, hopefully we keep preaching the same thing over and over again. But time value of money, right? You got to understand it. That a
Mm-hmm.
dollar today is worth more than a dollar tomorrow. So how do you leverage yourself and you convince them to put it into into your money market account where you're getting just a little bit more interest and you're not losing as much money.
Yeah, exactly. I mean, you're guaranteed, you're making money, but some people are afraid to just change that, like change the too high yield checking accounts. And I think, I don't know what it is, like, but it's just being comfortable, not feeling like you know what you're doing. I don't know what it is.
Like it's probably just a lack of understanding,
Mhm.
and just cash is king, coming from a mindset of cash is secure, I'm safe with the amount of cash that I have on hand, and obviously that's necessary, right, for especially certain things, right, if you have kid, that's not my expertise at the moment, right, having things that I need to do, right. But I feel like that's just kind of where it's coming from, where people think, oh, I don't want to get into the stock market because this cat, like, it's $25,000 is $25,000, right? And they don't. I feel like people don't really realize the amount, like how far it could go.
Yeah, and that's the thing. And that's why I just say when people are interested, skeptical about it, I just say just look up I just send them the link to the calculator, and I say, look, here's what the market normally goes up every year. Now go pick your favorite companies and see how much they go up every year, and then come talk to me. But I think the market as a whole Wednesday, right? Yeah, it got ripped out, but I'm interested to see what tomorrow holds. There may be some more buying opportunities that, like you talked about, the Corona spikes in Europe. We could be seeing something like that in the United States soon. That could be some of the stuff that's baked into the sell-off. We
Yeah,
saw what happened in March when we had to shut down the government, right? When we had to shut down the economy. I mean, um, and there's potential fear of something like that happening again. But if that happens again, if you've got money on the sidelines, I mean, look how quick. I'm just looking at Oracle still for some reason, for the same reason or whatever. But in March, Oracle was at $53 bottom. August went up to 82. So, and that's not even a crazy jump like some of these other stocks. So just keep an eye on it. See what happened when the economy shut down. If we see another pullback, another 15-20% pullback, get ready, because you'll be able to move into the market and make some money. I mean, we saw how quick the recovery was with help of the Fed and their stimulus, and we know that they're going to keep on helping.
yeah. I think it. I mean, probably just to close out this podcast, I really think that the Fed making a decision, if they could pass another stimulus check bill, I think that would be pretty huge for the markets.
Yeah,
Obviously,
yeah.
we see how much the markets have changed just on investor speculation. But if you do see another wave of essentially relief checks for people, I think you could see the markets breaking records again. Just
Mm-hmm.
like it did I guess a month ago now.
Yeah,
Maybe a
especially
little
with
more.
this pullback that we've just seen. Tech,
Yeah,
the biggest gainers, pulling back, 20%. If a relief bill comes in,
it's almost a no-brainer.
it's a no-brainer, I feel like. But we'll see. Only time will tell. But either way, stocks only go up, baby.
It's the bull movement. That's all it is.
Thanks for tuning in to episode 2, guys. If you got any value, be sure to hit us up Twitter at the Bull Movement, Instagram at the Bull Movement. We want to hear your 2 cents, right? We're making this for ourselves. It's our journey, but we're also building it for you. We're trying to bring some value. So hit us up.
We're also doing this live on Twitch as well, so we're gonna be, messing around with, maybe a potential pod channel for just the bowl movement. We're streaming it right now on our individual channel, so we'll probably be tweeting that out, next time we do it. This is a learning opportunity. We're growing. We're just figuring things out. And yeah, I'm enjoying it. Hopefully we can build an audience, build people who want to, learn about this kind of stuff and kind of just, take it from there.
Yeah, sounds good. We'll see you guys on the next one. Welcome, welcome, welcome. It's episode 2 of the Bull Movement. I'm super excited, Christian. We just dove in. You guys are going to love this podcast. We talked about Tesla's battery day. We talked about the crazy Nikola saga. We dove into, compound interest and personal finance and just the importance of being in the market, being in it for the long term, and how stocks are only going up if you do it the right way. So we went wild on here. I hope you guys have some value. Like always, tweet us at The Bull Movement. Find us on Instagram at The Bull Movement. And then we're going to be bringing out The Bull Movement Twitch. So always interact there. We answer your questions live on Twitch. But other than that, guys, we'll see ya.